Welcome everyone to the non-GAGAS Engagements webinar presented by the Center for Audit Excellence. Today we're going to talk about non-GAGAS engagements. We're going to cover the background, including audit requirements for governments in Ohio. We're also going to cover what GAGAS is. We're going to talk about independence issues, and also we're going to cover the required pre-approval to complete a non-GAGAS audit. We're going to talk about testing to be performed, including those testing steps that are similar to GAGAS audits. We're also going to talk about some reduced testing in areas and get into the specifics of those. And we're also going to cover what's in the non-GAGAS teammate cabinet. Finally, we're going to talk about reporting and how this is different for non-GAGAS engagements, since there are no standards and we're not issuing an opinion in non-GAGAS engagements. You'll notice I'm not calling them non-GAGAS audits. That's because we're not issuing an opinion, so we refer to those as engagements. We'll also cover the impact that will have on the letters that we send to the clients as part of our audit package. And we're going to talk about the issues and how those get reported. Those are all going to be internal control deficiencies in the schedule of findings. So let's get started. First, let's talk about the background of audit requirements. So Ohio Revised Code 11710A requires in part the Auditor of State shall audit all public offices as provided in this chapter, and ORC 11711A further requires the Auditor of State shall audit each public office at least once every 2 fiscal years. Ohio Administrative Code Section 117.205 talks about the requirement to do audits using the Generally Accepted Government Auditing Standards, or GAGAS approach. And it says, except as otherwise provided in rules of the Auditor of State, audits of public offices pursuant to Chapter 117 or Section 115.56 of the Revised Code shall be performed in accordance with generally accepted governmental auditing standards. Also, Ohio Administrative Code 117.402 says, where the Auditor of State determines that an audit of a public office is not intended to satisfy the uniform administrative requirements, cost principles, and audit requirements for federal awards in 2 CFR Section 200, or the UG. As amended, the Auditor of State may provide for an audit which the Auditor of State considers appropriate to the needs of the public office, but which need not be performed in accordance with generally accepted governmental auditing standards. Additionally, the Audit Manual, Section 53800.9, clarifies these requirements, and it says AOS financial audits must follow GAGAS unless the regional auditor consults with the chief deputy auditor to conduct a non-GAGAS financial audit. 53812 also has a footnote that defines non-GAGAS audits as, quote, merely audits of whatever financial, compliance, or other information the AOS determines is available and relevant. These audits do not claim to adhere to any authoritative auditing or attest standards, but satisfy our statutory audit requirements under ORC 117. So those are what we would call non-GAGAS engagements, or an ORC 117 audit in the public interest. A little more background. GAGAS stands for Generally Accepted Government Accounting Standards. and that is also known as the Yellow Book, and that provides a framework for conducting high-quality audits with competence, integrity, objectivity, and independence. The Yellow Book is written by the U.S. Governmental Accountability Office, or the GAO, and is used by auditors of government entities that receive government awards, and other organizations performing Yellow Book audits. It outlines the requirements for audit reports, professional qualifications for auditors, and for audit organization quality control. Auditors of state, federal, and local programs use these standards to perform their audits and produce their reports. So the current version right now is the 2011 version. And the 2018 revision of the Yellow Book is effective for financial audits, attestation engagements, and reviews of financial statements for periods ending on or after June 30th, 2020, and for performance audits beginning on or after July 1st, 2019. An early implementation is not permitted. So we're talking about fiscal year 20 for schools, the 6/30/20 year end, and calendar year 20 for cities and counties, 12/31/20. So fiscal year 20 for both of those is when this will be effective, and early implementation is not allowed. Both the 2011 and 2018 versions are currently available at this link from the GAO, and the 2011 version is also available in the All Employees briefcase. That information, of course, will be updated once the 2018 version is effective in fiscal year 20. All right, so let's talk about independence. We know that auditing standards require us to be independent to perform audits. And that means we can't perform management functions or provide services that would impair that independence, in fact or in appearance. However, in order to assist our clients, sometimes we perform non-audit services that threaten to impair our independence. Such threats can often be mitigated by applying safeguards to maintain independence, but some non-audit services cannot be performed by auditors and still preserve our required independence. Audit Manual section 53-812 talks about this, saying, if we cannot apply safeguards to reduce the threats associated with a non-audit service to an acceptable level, then we cannot perform both a GAGAS audit and the non-audit service. However, because we are a sovereign constitutional entity, AOS may choose to accept the non-audit service request and conduct a non-GAGAS, quote, audit in lieu of a GAGAS audit, so the AOS can perform both. For example, a reconstruction and compilation and the audit. For instance, if a village fiscal officer has recently been replaced and many of the accounting records are missing or were destroyed, the village might contract with LGS to reconstruct their records for the audit period. But if we are still on site working on a prior year's audit due to poor record keeping in the past, in this case, LGS is performing significant non-audit services for which safeguards cannot be put into place. Therefore, we would perform a non-GAGAS engagement with the required pre-approval of the Chief Deputy Auditor. So AOS Audit Manual 53-812 further requires that the regional chief auditors must consult with CFAE in these circumstances and obtain prior approval from the Chief Deputy Auditor to pursue a non-GAGAS approach. So that approval must be obtained prior to starting any non-GAGAS work that you may be hoping to do. And again, that's 53-812. So it's the process to get that pre-approval. It starts with a non-audit service form, and that needs completed for any engagement that we are providing non-audit services in addition to an audit service. That form is available in the briefcase, in the audit employee's briefcase, and it does include instructions for how to complete that and the required approvals. So if the NAS indicates an impairment, the form should be submitted to CFAE under the Independent Specialty and Spiceworks for review and approval. Once an impairment is confirmed, normally we would not accept the audit engagement. However, in special circumstances, the regional chief auditor can consult with the chief deputy auditor to gain the required pre-approval for a non-GAGAS engagement. And of course, once the approval is obtained, this should be documented in email and maintained in the teammate project for the engagement. And we'll talk about where that goes later on when we cover teammate. So testing in non-GAGAS audits, of course, we have some similarities and some differences from our kind of regular GAGAS audits. So we'll talk about similarities first. While we don't follow standards for these non-GAGAS engagements, our intention is to perform the same or similar procedures as our GAGAS audits, and that's in order to provide the best service and accountability to our clients and the taxpayers. So some general similarities we have listed here include that the audit information form, or the 8360, still needs completed, and it should document that this is a non-GAGAS, no standards engagement. An engagement letter and a representation letter are still required, but there are modified shells that reflect our non-GAGAS approach, and those are available in the audit employee's briefcase. Some general differences. Procedures are performed in order to meet the ORC and OAC audit requirements that we've talked about, and those are determined based on our judgment as a public office to test or review items that we deem significant, either qualitatively or quantitatively. So we're not following standards. We basically get to determine what it is that we test. An entity requiring a single audit cannot have a financial statement engagement completed under non-GAGAS. So the Uniform Guidance 2 CFR 200-514A requires that the audit must be conducted in accordance with GAGAS. So that's right out of the UG. Also, since we are not opining on the financial statements in a non-GAGAS engagement, all documentation, issues, and other communications should include engagement in place of the word audit. So those will be referred to as engagements rather than audits. So we're still performing our testing for these non-GAGAS engagements in teammate, and now there's a non-GAGAS teammate project available out there that we can use to do those. So some folders used for the non-GAGAS engagements are exactly the same as those used for our GAGAS audits. And that's because these requirements don't change based on accounting and auditing standards. So there's a couple unmodified folders. Those would be the compliance folders. Those will be the same as what we would use on our regular GAGAS audits. You still need to pull those in by year and complete those as required. A note on that, any finding for recovery, finding for adjustment, referral letters, any of those things that are covered in the compliance supplement implementation guide, those procedures should still be followed as applicable. So make sure you're still using that implementation guide, still using the compliance supplement, etc., to do any testing applicable to your entity. Also, the confidential file is the same what we would keep confidential and not subject to public records request hasn't changed using this non-GAGAS approach, so that folder remains exactly the same. So let's talk about what's new in this non-GAGAS teammate project. Of course, there are some general differences. The profile on the planning ribbon should identify this as a non-GAGAS engagement, so you'd want to make sure the staff type selected is non-GAGAS on these engagements. Also, while there are still references to the audit manual to auditing standards, including the auditing clarity standards, attestation standards, some references to GASB requirements throughout teammates. Those are for informational purposes only. So you don't necessarily have to follow those, but sometimes there's good guidance in that information that will help us complete our testing and consider some other things while we're performing those tests. So those things are not required, however, they are there for information. And we do have modified folders in this new teammate project. So those are planning and controls, substantive, reporting, finalizing, conditional procedures, financial statements, and consultations. So the consultations folder has been modified as well. So let's look at planning and controls. The first step is the non-GAGAS instructions and approval. And this is a new step, and it includes information similar to this training, things like the difference between GAGAS and non-GAGAS and some of the changes that we've made to this teammate project. And this is where we would include documentation of the Chief Deputy Auditor's approval of the non-GAGAS approach. So that email from the Chief Deputy Auditor should be included at this step, and that is noted in the record of work done. Also, there is an independence documentation step, and it looks similar to our GAGAS independence step. However, it focuses more on the fact that we are not independent. So we would usually only perform these non-GAGAS engagements if independence is an issue. So this is where we would document that. And again, the focus is on that we are not independent, which is different than our GAGAS teammate project. So keep that in mind when you're documenting independence. Planned report issuance, that's also a step under the planning and controls. It's essentially the same. We also have a meeting with the client step. So even though we're not following standards, we should still have an entrance conference with the client if that's possible. Sometimes it might not be, but our goal is to, talk to the client and meet with them prior to starting the audit engagement. And we should meet with them. We also should talk about that the engagement is not subject to the auditing standards with them, and make sure that they understand the implications of that there won't be an opinion issued, and that the engagement is only intended to meet the requirements of Ohio Revised Code 117 and the Admin Code 117.402, so that we're not issuing an opinion. This isn't like a regular audit, so we need to make sure they understand that. With that being said, you can use the entrance conference package practice aid that's in the audit employee's briefcase as a starting point for your communications as related to the engagement conference. And you can use those emails for the entrance conference as well. But they should be modified to reflect the non-GAGAS approach being used. So make sure that you can use those, that's fine. Just make sure that those get modified to reflect what we're actually doing as part of the audit. The next step is the reporting entity, and it's pretty similar. It includes references to the authoritative literature for consideration when completing the step. So while this is not required, since this engagement isn't following standards, we should still document the information for future audit periods. So we probably, if something significant changed a year we're doing a non-GAGAS audit, as far as the reporting entity is concerned, then we should still document that so we have that to carry forward and documented for the next audit. The next step that's new is the engagement strategy. And this is where we document our testing strategies. So something similar to the ASM. And we're using this section instead of the benchmarks and materiality worksheet. So the record of work done includes alternative documentation if you're not using the benchmarks and materiality spreadsheet. You can document there how you have determined what's significant and how you plan to test things. We don't have materiality requirements like what we use in GAGAS audits, so we need a reasonable method to determine what is significant, and that would get documented in this engagement strategy step. However, we'll say you can use the benchmarks and materiality worksheet to document the significance threshold. We just need to make sure that we're documenting in there how we determined it, what it is that we're testing, and those sort of important things, similar to the ASM, but just in a condensed format. The control documentation step under planning and controls has been included. It is reduced compared to our GAGAS audits, and it's similar to the old LIRA approach. So it says we can sufficiently document 1, the control environment, 2, management's risk assessment and monitoring activities, and 3, computer controls in one brief narrative describing their competence, the evidence of their ethical values or lack thereof, and computer control environment. So you need not complete the ACE, the IRAF, the SCAP, the RMC, the ICS, the SOD, or the RCEC. However, similar elements should be incorporated in the narrative. And it also says that walkthroughs or implementation tests should be completed as well. And you can use the ICS if you want for those, but that's not required. So we still want to document that we've obtained an understanding of their controls, that they do have some controls implemented, and we should make any related control recommendations as well if we find that there are deficiencies in their control environment. The next step is the fraud risk assessments, and this is a modified FRAC. So rather than listing all the fraud risks in the form, it asks that the auditors document fraud risks of which they are aware, as well as the reactions to those fraud risks. What is our engagement reaction? What are we going to do because we know that this is a risk? And where those reactions are documented. So where the additional testing is documented, where we document that we talked to someone and looked at documentation, those sort of things need to be documented in this step. And finally, we have the engagement letter step, and that we do have a non-GAGAS shell in the briefcase for the engagement letter. It's similar to the AOS regulatory letter, but of course it doesn't include terms like audit, materiality, those things that are not included due to this being a non-standard audit. So this does need modified for client and the reporting framework if it is outside of the AOS regulatory. So if you're doing OCBOA or GAP presentations, using this non-GAGAS approach, you may have to modify that engagement letter some. Normally we see regulatory basis type statements that are being reviewed under a non-GAGAS approach. The engagement letter still outlines our responsibilities and the responsibilities of management and those charged with governance, so those sections are still included in there. It still kind of goes back and forth as far as what their requirements are and what our requirements are. It also still includes the fees for the service for the non-GAGAS engagement, as well as if they are asking us to perform any other non-audit services that we would have to charge any related fees for. So that section relating to non-audit services is still included in the engagement letter. So, substantive testing. There have been some modifications to these. So let's go through them. Cash. The cash section has limited procedures, and that includes year-end cash balance summary step, the cash confirmation step, and cash reconciliation testing. So cash confirmations are still required for these non-GAGAS engagements. We know often that LGS could be involved with reconciling the bank balance to the book balance, which may be why we're performing this non-GAGAS engagement. But in their procedures, they may or may not be actually confirming those bank balances with the bank. So to make sure that those are indeed correct and reconciled to the correct bank balance, we should still be performing those confirmations as required. Keep in mind that some cash reconciliation procedures can be limited if LGS is assisting in the reconciliation process. But remember, they're contracted to assist and not review or audit the information. So they generally can just use the information that they've been given. We did remove some steps from cash, things like confirming the authorized signatories. Those steps aren't in there. If you feel that there is additional risk related to those sort of steps, they can be included at your discretion. It just depends on what your fraud risk situation looks like. Next up, we have equity. And again, we have tried to reduce some procedures in the equity testing. So we did include the roll forward of equity. We still want to calculate that and make sure that it is rolling forward properly from last year. Fund balance classifications and encumbrance presentation. Those steps are still included, assuming that they're actually presented. Some of the statements may not include those presentations, and if so, obviously we can't perform any procedures related to those. So those are included if needed. And the footnote disclosure step is also included, and again, that's if they presented footnotes and we can test those. All right, so disbursements. We've put all of the disbursements in one folder, and that includes steps for both non-payroll and payroll. So the non-payroll folder includes steps to determine the overall risk related to non-payroll and any higher risk transactions that may need selected for detail testing. So detail testing may be necessary for items that include breaks in check sequence, manual checks issued by the entity, any suspicious or unusual disbursements. That would include to unusual vendors or from improper funds and those sort of things. So the payroll testing has been reduced. Non-payroll testing has been reduced, and we are not using ASDF forms for these because we don't have a set materiality amount. So those ASDF forms will likely not work for your testing. If you feel that you need to sample additional non-payroll items based on what you found or some fraud risk issues that you may have, that is acceptable. You don't have to stick with a high dollar or unusual transaction type approach. Just make sure you document how you determine those sample sizes and what your intent is as far as using those larger sample sizes or lower dollar amounts. So for payroll, again, the same thing. It includes a similar risk assessment step to the non-payroll, as well as we've asked for an officials test, so to make sure that officials' compensation is in line with what the statutory requirements are or any agreed upon amount that's approved by those charged with governance. So we want to make sure that those amounts are properly paid. It also includes a scan for unusual items, again, any people being paid a strange amount or those kind of things. And we also ask that you test one paycheck for each employee depending on the size of the entity. So again, if you have some questions or additional risks that you think are in place, those can be modified. These are, just to help reduce that testing since we're not following standards. We've also put all of the receipt sections in one folder, just to kind of condense that and eliminate some steps and sign-offs, hopefully. So the first one for receipts is government assessed taxes. So here we're going to test government assessed taxes, things like property taxes, using the tax settlement sheets from the county, as we normally would as a confirmation. We also ask that you scan the revenue ledger for any unusual postings in there. So if you see some grants got posted to property tax, then we need to be looking for those things as well. We also ask that those amounts get agreed to the accounting system and the trials as presented to us for audit. Sometimes that's just the financial statements, but we do need to take that back to the accounting system. For special assessments, those steps are similar to the government assessed taxes steps because they function usually in a similar way. So again, we're asking you to review the confirmations of what was recorded, that information from the county auditor. Also scan the revenue ledger for any unusual postings. And we also have a step in there to agree amounts to the accounting system and the trials. Intergovernmental revenue is a little different as well. It includes steps to review the schedule of intergovernmental revenue and test that for completeness. So that's if there's one available. So if they give us a schedule of here's everything we got from all of our intergovernmental receipts, that should be tested, reviewed, make sure it's complete, similar to last year, those kind of steps. Of course, we can make a lead sheet to do that as well. So that is included. Also, the step to test the distribution transaction list, the DTL, is still included in intergovernmental revenue. Here again, we also ask that you scan the revenue ledgers for obvious errors or omissions, so missed postings or posting things net instead of gross, those kind of things. And also, again, tracing to the accounting system and or the trials. The last step in the receipt section is the other non-confirmable receipts. This is kind of a catch-all for any licenses, permits, and fees, those kind of things that we can't test directly from confirmation. So we ask that you include a high dollar test to determine if amounts were posted timely, if they were posted to the correct account, if they were posted in the proper accounting period, And was there proper supporting documentation? So the other non-confirmable receipts is kind of a catch-all. We want to make sure we're looking at the things that are significant and make sure that they are posted properly. So again, timely to the correct account in the proper accounting period, and that there's proper supporting documentation to show what those receipts were for. There's also a step for debt. This section is somewhat similar to GAGAS audits, and it includes the testing of balances and activities. So if you have a debt schedule, we would still test the information on there, the interest paid, the breakdown between principal and interest, any new debt issued, that step is included. We've also included the review of debt covenants. So if they do have debt covenants related to their debt issuances, we should still be looking to make sure that they're complying with those as required. It also includes the testing of trustee activities. So if they have any refunded debt and that trustee activity is included, then we should be following that step as well. We included the reading the opinions of bond counsel step. If they issued new debt, we should still be looking to make sure that that opinion is included in what it says to make sure we're appropriately considering that in our procedures. And lastly, there's procedures related to liens, security interest, and collateral. So if the entity has any of those things related to their debt, we would still want to review those as well. So the last step in Substantive is other general procedures. And we do include a couple of things that we're used to seeing here. Things like updating the perm file. Of course, this is important for the current audit period as well as going forward if things change significantly or if there's new debt, new information we'll need in our subsequent audit periods, then we should be including that in the perm file as usual. Also, we've included reviewing the minutes. Here again, we get important information regarding the entity, the things that they've done. Of course, reviewing the minutes gives us important dates for compliance and those sort of things. So we're still going to read the minutes. And there is a step for pending lit and loss contingency. So we've included those procedures as well. We still want to make sure we are doing that in our understanding the legal environment and implications that the entity is operating in. Okay, so we also have a reporting folder in Teammate, and it includes the status of prior audit comments. So for non-GAGAS engagements, we say that the guidance for the quote GAGAS only engagements from Audit Manual section 38-149 bullet point 1 will be used, as these may represent ongoing issues of the client and or possible fraud risks. So we're still going to follow that GAGAS only engagement guidance in these non-GAGAS engagements because there's still some information in there that we need to know. So that bullet point in Audit Manual section 38-149 says, we will include a schedule of prior audit findings to report the status of all prior audit GAGAS level significant deficiencies, material weaknesses, and non-compliance findings. So we still expect there to be a schedule of prior audit findings that include any GAGAS level issues from the prior year, and if it's we need to follow up on those and make sure that those are getting corrected, ideally. Also, the reporting folder includes a report and exit conference step. This is similar to GAGAS engagements. There are a few less steps involved since they're not required, since we're not following the standards. A note on this, the agenda package is not required. The exit conference agenda package would not be required to be used because mostly that AUC 260 communication is not required we're not following standards, so that large section that includes the AUC 260 communication, we don't have to do that in this non-GAGAS engagement. But you can use that report package for consistency. You can just remove that AUC 260 communication from the agenda itself and still use that package and those emails and those kind of things if you want to stay consistent and keep your language the same from engagement to engagement. Finalizing, the finalizing folder. It still includes a lot of sections that are the same as the GAGAS projects. You can see here we're still addressing matters for attention. We still have our SIM. We're still documenting subsequent events, of course, the rep letter. And some of the sign-offs are included here too, as well as the final budget. So some of these steps in the finalizing program are the same. However, we do have some differences. This excludes some of these, including non-compliance, going concern, the issues evaluation, since everything goes in the schedule of findings now. We'll talk about that some more. The final analytics, we don't reevaluate our independence because we're obviously not independent, so we don't need to do that again. Communication with those charged with governance. As I mentioned before, that AUC 260 communication requirement is not in play in a non-GAGAS engagement, so we would not need to include that step. And the final risk assessment and materiality step is also excluded from finalizing since we don't have materiality and we don't need to reassess that risk assessment. So keep in mind the engagement results should still be reviewed with management and those charged with governance. Make sure we're still talking to the clients and letting them know what we're finding and how, make sure they understand and that they can address those in the future. Okay, so next we have our conditional procedures folder. And as you can see here, this does exclude a couple of steps, including those for the use of specialist or components/group audits. We don't anticipate that these will be necessary very often in these non-GAGAS engagements. So should these procedures apply to your specific non-GAGAS engagement, consult with your regional CFAE representative in Spiceworks for additional guidance if you find that those really do need used in this engagement. The scanned evidence and related party transactions are still included in these conditional procedures and should be included in the non-GAGAS engagement as necessary. So if you find you need those too, be sure to include those. All right, so we have the financial statements folder, the financial statements other, and as a note, this assumes the AOS regulatory basis. If there's another presentation that's being used, the auditor should obtain the required financial statement section from the team store and modify for this non-GAGAS approach. So the first step is the trial balances step. And it's, again, the same as a AOS regulatory. So if there are no trial balances, like specifically in Excel or WebGap, that they give to us to review, then we can use the statements as trials like we have before. There's also a draft statements and footnotes step. They might not, in these non-GAGAS engagements, they might not present footnotes. However, since we are not following auditing standards, there are no quote-unquote required disclosures. We should still review and evaluate the notes that are presented, if any, and can still include internal control deficiencies related to the note disclosures and the related controls in place or not, if they don't have any at the entity. Also on this step, just a note, we should consider the filing requirements related to the Hinkle system if they don't present any footnotes. So if they don't have footnotes, this would likely be an incomplete filing for the compliance purposes related to the Hinkle system. So keep that in mind as well. We still have the mathematical accuracy step and the adjustments and reclassifications. These are the same as the AOS regulatory steps and should be tested to the extent possible based on the information presented by the client. So those are the same. We should follow those as much as possible if we can. And again, remember, if your presentation or reporting framework is outside of the AOS regulatory presentation, then we should be modifying these steps to more accurately reflect their framework and modify those then for the non-GAGAS approach. There's also a budgetary presentation step, and that addresses the testing of budgetary notes, including budgeted receipts, budgeted disbursements, and actual receipts and disbursements. And that's all assuming that they did that footnote and presented that information. Again, this is based on the AOS regulatory presentation, so those might need modified if you have a GAP or an OCBOA presentation with statements. There's also, we could get unclassified statements. So unclassified statements are kind of talked about in the audit manual section 40,027 through 32. And these include statements that do not classify receipts and disbursements, so they don't have receipts or disbursements broken out by property taxes or intergovernmental. They don't have expenditures for general government, capital outlay, those kind of things. They don't break those down. And this may be part of the reason we're performing the non-GAGAS engagement. If they don't have statements that are properly classified, that could be part of our issue. And we should apply procedures in the financial statements section as possible to these unclassified statements. So as much as we can, we should still be performing those financial statements, other type steps. The audit manual section 40,027 further states that these presentations depart materially from the Ohio Administrative Code section 117.202A, and that section requires that public offices' accounting systems be capable of classifying transactions. So if you actually go out to the Ohio Administrative Code 117.202A, it says all local public offices shall maintain an accounting system and accounting records sufficient to enable the public office to identify, assemble, analyze, classify, record, and report its transactions. It should maintain accountability for the related assets and liabilities if generally accepted accounting principles apply. It should document compliance with finance-related legal and contractual requirements and prepare financial statements required by Rule 117.203 of the Administrative Code. So if they present unclassified statements, we may have a compliance issue as well related to their accounting system and what is required of that. So keep that in mind as well. So let's talk a little bit about what happens if the engagement changes from GAGAS to non-GAGAS. So if you start an engagement as a GAGAS audit and then you have to change it to a non-GAGAS engagement, what do you do, particularly in Teammate? So of course, once you get the approval from the Chief Deputy Auditor to use this non-GAGAS approach, You would have to contact your office manager or other designated regional GP user, and they'd have to modify the audit description in GP to non-GAGAS/no standards to make sure that we're keeping track of the proper status of this engagement. In Teammate, you would need to modify the project's profile in the Planning tab to reflect the non-GAGAS staff type. And that's in Planning, Profile, General, and Staff type. That's where you would change that from whatever you had before to non-GAGAS. And for Teammate audit procedures, anything that has already been started, or you would compare those to the non-GAGAS steps and update as necessarily to reflect that approach. And of course, you could pull in any non-GAGAS steps if you haven't started some of the testing procedures. For reporting differences in this non-GAGAS engagement approach, we do have a non-GAGAS report package available on the audit employee's briefcase, and it is in the PDF format with bookmarks and several attachments to kind of help you get this report going in the proper fashion. So it includes the structure of the report. So it shows what order the report should be in, and it goes through the first is the cover sheet, then a table of contents, then the report letter, the financial statements, the notes, etc. It tells you how that report should be structured. The report package also includes a cover sheet, and this is a PDF file, the same as the ones we use for other engagements. However, it does include the non-GAGAS engagement verbiage on there as opposed to a single audit or a regular audit. It does say non-GAGAS engagement. There's a file for the table of contents, and that's a Word file, so it can be modified to reflect your reporting framework. So that is included in there. There's also the report letter. This report letter is only one letter, and it replaces both the opinion letter and the GAGAS letter, since we're not giving an opinion. It should be presented on the regional AOS letterhead, and it includes paragraphs that are modified versions of our GAGAS letter, and that relates to internal controls and the compliance audit sections. There's also an example of the schedule of findings in the package. And this is where we would include significant issues noted during the engagement. And that includes any that would usually be reported in the management letter as well. Everything gets reported in the schedule of findings. Also, control deficiencies in the schedule of findings should not be labeled as material weakness or significant deficiency in this non-GAGAS report. Instead, we should label them internal control deficiencies as reflected in the report language. So make sure we don't have to make that distinction for non-GAGAS. Also in the package is a schedule of prior audit findings. As usual, this should be prepared by management. So there's a Word file attached that can be sent to the client for completion. Keep in mind, we may need to modify or remove audit from that title of the schedule of prior audit findings. If the prior audit was also a non-GAGAS review or engagement, we would not call it an audit either. So keep in mind that that may need slightly modified. So that's the reporting package. So then what's next? What happens after we complete our non-GAGAS engagement and report and everything's all said and done? Audit Manual Section 53-812 is where we talk about cleansing audits. So it says GAGAS audits, including, of course, single audits, for the audit period following a non-GAGAS audit where AOS impaired its independence, must be contracted to an IPA for a cleansing audit or remain a non-GAGAS engagement with the prior approval of the Chief Deputy Auditor. And cleansing audits are described in Yellow Book Requirement 3.48. So as required by Yellow Book, we have to do a cleansing audit, and that has to be a GAGAS audit by an IPA firm. Okay, so some points to remember from this presentation, the really important stuff is make sure that pre-approval from the Chief Deputy Auditor is obtained, is documented, is included in teammate. That has to be done prior to starting the non-GAGAS engagement by the audit manual requirement. So make sure that you're getting it documented and including it in teammate. Also, let the non-GAGAS teammate project guide the way. You have that out there. Follow it as much as you can. It will keep you hopefully to reduced testing, but it can be modified, but it will guide you through the process since these are unusual. And also remember there are briefcase files out there, practice aids available to help you through the process as well. The engagement letter, the non-GAGAS report package we just went over, and the rep letter. So make sure you're using those correct files for your non-GAGAS engagement. So that's all for this webinar. Feel free to contact the center if you have any questions about non-GAGAS or anything that we would normally assist with. Thank you.